right, everybody. So I've been having some technical issues this morning. So if you guys could let me know in the chat if you guys can hear me okay. If not, I may have to restart the stream. So yeah, if you could do that for me, I'd really appreciate it before we get super involved. Just give me a 1 in the chat if you can hear me okay. So yeah, just let me know if you can hear me okay. Really appreciate it. Because I can't tell. It looks good on my end, but given the problems I've been having this morning, I'm not just going to go off what I'm seeing because it looks good, but you never know. Yeah, hopefully everything's going to continue to work. But yeah, we shall see, won't we? Yeah, so there's no news today, right? It's Tuesday. So we're going to have to wait till tomorrow probably to see dynamic moves, right? We'll see if it offers something today. But yeah, the overall expectation, like it was yesterday and on Sunday, what we talked about, we're expecting low probability, high resistance. And looking at, how price delivered yesterday, you can kind of see that, like that expectation was pretty accurate. We've just been sideways, really digging into the daily order block here. Right, so we'll see if it wants to displace or hold inside this and then give us that continued move to the buy side. Take off some of the annotations. You could see there's lots of liquidity up here if they did want to go higher. Right. Similar thing here. There is an SMT at the highs there, as you could see. Right, S&P peaked above the high. The Nasdaq didn't, and we've kind of been just gravitating lower as a result. Right, sideways, lower, small ranges. Keep in mind that small ranges lead to large ranges. What days have small ranges? Generally, it's days with no news. Days ahead of news events, right? And we have a pretty big news event. Like I said the other day, I think I said it on Sunday, but this Jackson Hole Symposium thing, I heard some significance placed on this and how it leads to sloppy conditions. I mean, we can already kind of see how price has been, right? It doesn't upset anything in terms of what the narrative is, which has been bullish. All right, but it's kind of just, hanging around in this order block. We also have this weekly bullish order block I've been talking about since Sunday. And so if you took a loss yesterday, right, if you were engaging and trying to force things and push for a big, large range, and you weren't satisfied with the 20 to 30 point rule we use when trading Nasdaq, or 5 to 10 points in the S&P, you probably didn't really have much opportunity. You most likely took a loss, and weren't able to capitalize on the small fluctuations happening. But that's essentially the vibe right now, right? So we aimed for Friday's low, which you could see was hit. Okay, we talked about that on Sunday as a possibility. And now that price has basically peaked below that, we want to see, is it going to use that liquidity as the opposing liquidity to set us up with the run higher, taking out these upper portions, right, of liquidity? Or is this going to lead to price overall failing and then maybe turning this low to that high as a potential breaker that then sends price down to the previous week's low, right? So these are the scenarios that we have in front of us, all right? And so with that being said, we got to wait for displacement because we're in consolidation. We do see that, this run higher, lower, price is somewhat respecting that range. Go to the 4-hour chart, you can see there's an order block. We see that there's a down wick in here, so the mid portion of this wick is going to be important. Get that out of here. And I mean, you could see that it's a mess, absolutely a mess. So you're, again, with no news and news coming later in the week, right? You got to manage your expectations. You can't come into this type of environment and then demand and push, because if you did, you probably learned a valuable lesson yesterday in terms of not pushing and what to anticipate during conditions like this. We're still in the summer months. August is generally one of the more, garbage months to trade. Okay, just like January is, right? And December. Okay, so there's a couple times of the year where you should expect or look to expect price not being as clear as you would generally hope, right? So with that being said, your risk is cut in half. It's just the way it is. If you don't like that, you're going to learn soon enough that you better get to liking it, okay? And just submit to it. Not every day is going to be a dynamic trading day. We'll see if something happens today that's worthwhile. If it's not worthwhile, we're going to use today to practice discipline, right? For now, we're going to see what the DXY is going to do in here, right? So I laid out the two potential scenarios. I'd prefer to see us hold in the direction of buy side because the higher time frame narrative is still bullish, as you could see. Right, we do have that SMT at the highs, and that has created a fractal high. Once the third candle printed, the next candle moved in this direction going to the downside. Because when a fractal high forms, right after the third candle, the next 2 days can be expected to push against, in this case, the bullish narrative, and then reach for some form of a PD array that's, in this case, at a discount relative to where price was at off the heels of the fractal high forming. Same thing's true if there's a fractal low that forms, right? If this does not break down through this low here today, and it just hovers around and hangs out above it, and a fractal low forms inside this bullish order block, and then starts to displace away, getting into this daily fair value gap, with the news that comes on tomorrow and the rest of the week, then what I'm talking about obviously can, seem extremely valuable because it is, in terms of price navigation and understanding how price delivers. All right. So again, the expectation is to see that price is going to try to continue going higher. If we were looking at the daily chart, but now we're looking at the weekly chart, does this scream bearishness to you in any form or fashion? Aside from the fact that, okay, maybe it's going to reach down, try to purge this out, but still trade inside this bullish order block, right? No, nothing tells us other than, buys are going to be most likely favored. Now, if we start displacing, obviously, and get down below this midpoint of the order block, and it doesn't show that it wants to hold this, order blocks are balanced price ranges. So if we violate the center portion, that tells you that this is going to be invalid, and the next objective will be potentially relative equal lows, or this fair value gap, which is coupled with these relative equal lows. But again, is that happening yet? No. So what is your intention on the lower time frame, given the fact that the higher time frame is still showing support to buy side delivery? You're going to continue to seek buy side, right? And then just see any type of retracement like this as simply that, a retracement to try to then go higher. All right? So that's going to be our objective today, right? Whether that happens or not, obviously we're going to let the macros kick in. We're in the first one, the most unreliable macro, the 550 macro, the macro before the New York Open presents itself. And we'll see what happens, a little bit later into the session. When there's no news, a rule you got to implement, or at least I recommend you implement, is don't take a trade before 6:30, right, or the New York Open. Don't take a trade at all. Don't even consider it. Consider what you see here, right, before the 6:30 with no news, or even if there is news but it's at 6:30, consider it trading in the manipulation within the power of 3. In this case, the manipulation would obviously want to go lower if we're going to go higher, because that's manipulating the opposing side, possibly to trigger in liquidity or build in sentiment to try to get people to trade lower. This push lower here probably has people thinking we've topped out. But because we're married to the higher time frame and we know that this is where the real story is, we're going to hold on to our narrative pushing to the buy side for the indices. Right? And this mindset, this is how you stick to a narrative. Higher time frame doesn't change on a day-to-day basis, like I've mentioned ad nauseum since I've been live on YouTube and in my private group. It's like turning a big giant ship. It takes time for things to overall change. So what does that mean for decision making? That means that you need to take time and be very demanding with the price delivery on these higher time frames before you look to switch, because you could see price declining, like you kind of see it doing recently, although it's kind of just an indecision candle inside an order block. But you could see this declining on the lower time frame and be convinced, if you're on the 5-minute, 15-minute, and you don't pay attention to these higher time frames, you could be convinced it's going to go lower. Then you'll try to push shorts and think you're a genius because maybe you caught a couple of trades going against the high, maybe thinking and feeling like you pick the high, just for price to be trading to a discounted rate to then blast off when a news event comes out, because it was manipulation within the higher time frame weekly power 3. In this case, potentially going bullish. Right? Keep in mind too, the small ranges lead to large ranges. Large ranges lead to small ranges. Right? When do those small ranges open up? After they've been stacking up, right? If it's been a couple of days and it's just been sideways. When can you expect a larger move to take place? Can you guys tell me in the chat? When do you think you could schedule displacements around, especially if it reaches into a higher time frame PD array off the heels of small ranges taking place with no news? What can be used in our toolkit to get us in front of times when displacement could take place, or to be able to help us time it on the higher time frame? You guys know? Okay, macros. So if you're thinking about the lower time frame, sure, you can mention macros, but there's one other thing that converges with macros. For higher time frame delivery, you need institutional sponsorship. For large ranges on that higher time frame, you need institutional sponsorship. When can we schedule that type of event taking place, or anticipate it? When can we anticipate that? Okay, you say Tuesday, Wednesday. Okay, what specifically, aside from the days? Okay, PD array. Okay, there's one thing that everyone's glossing over, right? The very first thing we look at when we hop on the chart, right? Aside from liquidity, aside from PD arrays, aside from the day of the week, although the day of the week does kind of converge with what I'm trying to point you to. News events. Exactly, Tony. Exactly. Because institutional sponsorship comes from news releases. It's like sleight of hand. It's like they want to use the news events as a reason for displacement. And that's when institutional sponsorship can be seen in the marketplace. So if you have small ranges, spending time inside of a PD array or reaching towards a PD array that could be expected to kick price back in line with the narrative, which is bullish in this case, especially if there's no news the start of the week, they're going to use that as manipulation more often than they don't. Everything that you guys mentioned, though, is good for anticipation for reactive levels and liquidity mapping in a lot of sense. But Tuesday and Wednesday is also expected for the expansion phase of the weekly range, right? But it's very important. Just any old Tuesday and Wednesday may still not be very fruitful if there's no news. Like today's Tuesday. There still may not be much of a delivery taking place because we have news tomorrow and the rest of the week that are pretty high impact. So if you were smart money, wouldn't you want to wait, right? You'd want to wait. You want to get people fooled in consolidation like you see today, right? And throughout the, since what, Thursday, Wednesday of last week? And then just simply wait for institutional sponsorship to push price aggressively. Then you could look to position. A lot of them get in before the move, right? But, that's them. They got insider information. But obviously what we use is our technicals and then macros and, the models and timing. If you're looking for the higher time frame to deliver, just like how macros, the last 10 minutes and the first 10 minutes of every hour, deliver price or have an interest in pushing price around towards liquidity in terms of timing for that lower time frame. News events are the macros for higher time frame delivery, whether you're trading from a level or to a level. Most of the time, those big moves are going to have to come from a news event taking place in terms of timing, because that's when institutional sponsorship takes place. Right? Yeah, all those different things you guys mentioned are all important in terms of timing, in terms of identifying liquidity, positioning yourself within the expansion phase of the weekly range, targeting short-term, long-term, intermediate-term liquidity with IPTA data ranges. And then, of course, PD arrays on the higher time frame. Those are levels that you want to see price move from. But just because a higher time frame PD array is met doesn't mean it's going to deliver. How can you time price delivering from that PD array? News events. If you're looking at the higher time frame to reach towards a level or reach away from a level or push away from a level, you can use the news events as a macro, as a timing tool. That's why ICT says that the news events can help you schedule your life around trading and when you should consider really being on the chart and versus when you should not put too much energy into certain days. And it revolves around news events. People don't understand this information. They don't understand why the news is so important. Some people don't even watch the news. They don't even look at the calendar because they think it doesn't matter because it's all fake anyway, right? When the news comes out, you're late. A lot of times that's true. But it's all the time used in terms of timing. And if you go to the higher time frame charts and you take this perspective and you backtest this in the coming rest of the year, or even just, in the next month, you're going to be pretty fascinated that, this perspective was right there in front of you and it helps you tremendously. You're going to be surprised at how tremendous the help can be for timing. right? And again, I'm sorry for my freaking webcam. I don't know what the hell's happening to it. Something happened this morning. It worked for a little bit and then it just turned off. So, sorry about that, right? It's hearing a talking screen now, but you know, it is what it is. But yeah, so with that being said, you know, again, we do have price just basically consolidating. It looks like it may want to purge the previous day's low, right? DXY does look like it's, you know, still kind of holding up. It does have a fair value gap in here we're going to watch. And if price gets above it, you know, we'll see how it wants to behave with that. And if it uses it as support, we may be looking to reach up a bit further. We got relative equal highs up here that are pretty obvious. And if that takes place, you know, price is still going to continue to want to push further into the Nasdaq bullish order block on that weekly chart. Also on the daily chart, right? There's two order blocks, one that's on the weekly and then one that's on the daily that we're really pushing into right now. And then, of course, like I said, we have previous day's low here. So it seems like, you know, if we close outside of this, again, this is a very obvious clean equal high target. We also have equal lows. Higher time frame DXY is bearish. So again, this is why we're going to have to wait for things like this to be traded through, see if it could support that, and then further confirm so then we can get behind it and then push this lower and find a short. But it's counter trend if we're going to look to short in any way. Higher time frame wise, it's still bullish. You know, we just may be in a period of time where price is trying to go against them because we were at all-time highs. So the euphoria is crazy, and you know they gotta punish them in one way or another, right? Scare people out so they can continue the weekly chart buy-side delivery. Right, and then if things change, we'll be able to change. But for now, these are the ideas that we're going to stick with. Where the hell is the buy side? Oh, there it is. Yeah, so we got 15 minutes until the open comes in, so we're going to wait and see what it wants to do. Plus, we got London's low here. So they may want to use that liquidity as the opposing view. While price is trading towards that, we want to make sure we're watching what the DXY is doing. Because, if we get above this level in here, right, it's a 1 hour fair value gap. So if it was to invert that, overlapping fair value gaps like this, with pretty obvious targets, you know, failure to want to go lower really, you know, this could turn into an inversion, right? And if it does turn to an inversion, it'll also behave, ideally, as a balanced price range. Okay, and if that's the case, the mid portion, you know, now that we're above it, it should not even attempt to get to the middle portion of it. It should just be able to act as, you know, run on stops in here, shift in market structure, overlapping fair value gap. Maybe there's a fair value gap in there that we could see. I could hold price and set a framework for this to go higher, attacking the buy side up here. And if it was to break down below it again, right, and close below it, turn it back to like a reclaimed fair value gap by breaking through it and then using it as resistance again, that would then set the stage for us to target something like this, and then maybe even eventually get us down to here, and that would support buy-side delivery in the indices. That's obviously not in the cards right now unless it was to get back down below this. So for now, it seems like it's very likely that London's low is going to be targeted here, maybe even excited enough to take previous day's low. And again, we mentioned Friday's low and Friday's high at the start of the week as our first initial target, and of course that was met, as is generally the case going into Monday's trading, right? Monday's trading uses Friday's high and low, generally first and foremost, because that is a previous range. You know, that's the most near-term liquidity. Whether it's going to reach for a daily or weekly target at all, you know, it's going to first, most of the time, have to break through Friday's high and Friday's low. You know, especially since we closed inside the range and then traded back into it, right, to equilibrium, and then it just continued to drop and then targeted this, right? So yeah, hopefully that makes sense. We talk about that every Sunday, so if you're new, make sure you pop in on Sundays, because we talk about a lot of the foundational stuff every week, right? Again, if you guys get value from the content, you appreciate the stuff that I provide, if you've been improving with your time here, definitely don't forget to like the video, subscribe to the channel. Again, I'm sorry about the stupid camera. Something happened to it. So, but yeah, if you guys could do that for me, I really appreciate it. It helps me help other people. So, by default, supporting this channel, you're helping other people as well. If you guys got any questions at any time, or if something I'm talking about doesn't make sense, make sure you mention it in the chat so I can address it. You asking questions, you being bold enough to voice anything that you struggle with in the chat, helps those that may not be confident enough to ask their questions get those questions answered. So you're not only helping yourself, but you're also helping others, and that's much appreciated, because that's the goal of this channel. Nothing more, nothing less. It's just simply to help those that give me their ear succeed, or just improve to the point where they can end up succeeding and flying out the nest on their own. You know what I mean? So yeah. So hopefully thus far everything makes sense, right? Nothing tells us bullishness yet unless we were to break this high. Remember, if it breaks this high, we're also in the context of that higher time frame daily order block and the weekly order block, right? The weekly order blocks this delivery, and then the bullish daily order block here too. The middle portion of that, if it gets traded through aggressively, it'll target this low, which will be previous week's low. Right here. Okay. So, let me see. I got the middle. So yeah, I have the order block labeled here, as you can see. And you can see that the Dow has S&T at the lows with the Nasdaq and the S&P, I believe. Yeah. So the S&P has a lower low. It does have equal lows here. It is still inside the fair value gap right here, the daily fair value gap, which could send us higher. So we're going to keep our eyes on that. Remember, if there's a displacement that gets above the high up here, that's my trigger to want to look for buys. And that'll be coupled with the higher time frame narrative that's bullish. But until that happens, we have really no interest in trying to force buys. We have a cracking correlation. We have no news taking place. It's in consolidation. So these three factors are already enough for you to know that you're going to have to wait. You want to wait for displacement. You want to let it open up a little bit before you start trying to push things too aggressively, because you're just gambling, because you can't make a solid argument 100% with what we see right here with these things that I just mentioned. You can't make a solid argument overall. The price is going to decide to go one way or another and break out this consolidation until it starts to displace. Ideally, because the higher time frame's bullish and we're in that higher time frame PD array, being the weekly bullish order block and the daily order block bullish, and the higher time frame's clearly been going higher, it's more likely that it's going to respect the buy side, even though we're in the face of price kind of pushing against that. We're before 6:30, there's no news, so when that's the case, you have to wait for 6:30 to be your manipulation. Okay, and then you can kind of gauge things within the first 30 minutes in terms of where it's trying to go. Generally, ICT has mentioned, you guys probably missed this. A lot of people did, maybe you didn't, but most of the time for indices, the high or the low of the day will form within the first hour of trading. Not the first 30 minutes, not the first 15 minutes, but generally the range you're going to observe for the high or the low to form, if it decides to displace within that first hour, it's gonna form the higher low within the first hour. London's high and London's low become targets, generally either opposing liquidity, like it may turn into here. Right, we have sell side here, London's low, and then we have previous day's low. So I may use that to get purged. We're still within the daily bullish order block and the weekly bullish order block, and then give us a displacement breaking above some of these levels. And if it does do that and gets above this daily order block level once again, and then shifts and then we could see potential correlation get back in line and maybe DXY declining. That sets the stage for us to then try to attack some of these upper layered buy-side liquidity targets from previous days, and then eventually the previous week's high, right? And again, if that daily order block mid portion, which we're really pushing close to right now, gets traded through, that may set the stage for us to try to target previous week's low. Then we got a weekly wick in here, the midpoint. And so let's kind of zoom in real quick. You see exactly where the daily order block 50% level's at. So yeah, then just for completeness sake, you'll see the wick here, which is again an order block. It's the high portion of the order block. Okay. So yeah, we'll see if this specific area in here, from the red line to this wick consequent encroachment line, we'll see if price wants to hold within that. It's kind of busy, so I'm actually going to erase some of that. But yeah, these are the key levels we're going to be watching. Okay, and we're approaching 6:30 now. We got 10 minutes. And so we're going to gauge what's happening within that first 30 minutes up until the first hour. But the first 30 minutes is going to be impactful because once we finish the first 30 minutes, we're going into the silver bullet. And we also have a macro that starts towards the end of this hour. So we'll see what happens. We should be able to see a flurry of price delivery up to that point and be able to make a decision. Either we're going to have seek and destroy that doesn't really want to do anything, or it's going to take the lows here, maybe even leave the lows, but then displace to the buy side. Now, if it breaks down below this, we may have to adjust our perspective and start seeking previous week's low as the target overall. And even if we get to it a little bit late, right? If it comes, we got to wait for it to get down into here. That's totally fine. We have plenty of price delivery left if it is in fact going to seek that weekly low, right? We have over 100 points where we could then gauge a particular setup within that range, right? So again, we have contingency plans to change our opinion if needed, but overall we're solidified in our belief that the higher time frame's king and the higher time frame showing bullishness. So we will favor and put most of our leverage towards the buy side delivery. Any short opportunities should be cut to half risk. Your risk should already be cut a little bit. Your expectations should be highly managed today because there's no news. We're ahead of news events and price is pretty much just consolidating. Okay? So that's just the way it is. You gotta be able to have dynamic risk control and know when to push, when not to push, and when things look less favorable than you would normally want to have. Okay? And again, hopefully these levels make sense, why they're on the chart. They're levels that we talk about continuously all the time. It's nothing new here. London high, London low, previous day's high and low. And then we're basically in consolidation. Okay? So we'll see if 6:30 can give us manipulation behavior and then maybe even a start to a displacement. And then we'll go from there, okay? So do you guys have any questions? Yeah, Tyler, that's a pretty decent observation. If it is going to target the low, I like the perspective. I like the fact that you're pointing that out, because that very well could be the case that sets price up to target the low. And then we may see this turn into a market maker sell model, simply just to run up and take the highs up here. But again, we're not going to be able to confirm whether price is going to get down here or not, unless it was to react from here in some form or fashion. Breaking through it, closing below it, puts us in position to target lows. That'll send this higher. Okay, continuing to hold above this and then just continuing to displace sets the stage for this equal high up here that's very obvious in the DXY to be targeted. Okay, and again, I'd prefer, if we're going to want to see the indices continue in the buy side delivery, because that's what the higher time frame is showing. I would prefer to see this delivery respect price and push it lower, and then get us down below this, and then target these equal lows here, right? Because we got equal lows here and equal highs, right? And you know, the same type of perspective in terms of trusting the higher time frame dramatically, like we did on the Nasdaq, still translates to the DXY as well, right? We're still in a nasty consolidation on the higher time frame, but it's still doing what? It's still holding to the downside, right? We have this daily fair value gap. We got the midpoint right there. We can see when we drop down a little further, you know, it's kind of hit that. You see the reactive response from that. So we'll see if it wants to stay below that or not. We shouldn't really have to get up to the mid portion here. This wick is fake. If you go look at the futures chart, you can see that it's fake. It was just, you know, this broker wanted to manipulate price the way they did, liquidate a bunch of people. But, you know, that's what happens. So we prefer price, again, to hold these highs, you know. But, again, since it's in consolidation, it could reach up there. So we got to allocate the likelihood of that taking place potentially. All right, but eventually, I'd like to see us start to reach lower if we're going to continue to hold on to the fact that the narrative is going to be bullish. And we got the weekly chart here on the yields. Right, this dramatically impacts what the DXY is going to do. It's not really doing much because I'm pretty like 100% sure that they are holding price the way they are because of the releases for interest rates that are coming in September and October. They're going to be very big. It's either going to be a massive cut or more drama is going to take place. There's like a 90% chance that they're going to cut rates, and that is going to be sending shock waves and supercharge everything in the financial industry, because that means that money is cheap. It's cheaper to get, you know, so, you know, it'll stimulate a lot of business, a lot of growth. So, you know, these markets may be waiting for that type of announcement to get clarity, you know, for the future of, you know, or for the rest of the year, at least, right? So yeah, we'll see. Right? Yeah, nothing's telling us bearishness in this asset, at least yet. So I think that's also why DXY is being held in here. That's why it jumped so aggressively, right? That's why it's been so sporadic, because it's heavily impacted by the interest rates. You know, when the interest rates aren't doing anything and we're in the summer months, right? Like both the bonds and yields are going sideways. That's a condition that promotes harder to trade environments, more cracks in correlation, less likely to trend. You know, a healthy trending environment has to involve the bonds and yields trending, right? They're diametrically opposed, right? So one does the opposite of the other. But regardless, if it's trending and we're in a very clean, healthy environment, those markets, the bonds and yields, will be trending, right? And if we're going higher for the indices, we need to see this going higher, this going lower in a trending fashion. And then obviously that would then put pressure on this to go lower. Not pressure, like actual pressure, because there's no buying and selling pressure. It's just offering price. But yeah, that would be what you would want to see overlapping together with a bullish overall trend, a healthy bullish trend. Otherwise, you know, if it's sideways like this, and you can couple that with the bonds and yields going sideways, that tells you all you need to know about the condition, right? And then you go to the, you know, the indices, and, you know, you see a little bit of sloppy behavior. You can now justify why it's sloppy instead of just saying, oh, this is, you know, horrible environment, without understanding why, right? Like the drivers behind why it could be sloppy. Right, so yeah, now we're getting close. We got 2 minutes, so keep in mind what we've been talking about, okay? So let's see what happens. Shall we? Okay, remember, there's also SMT at the lows. So if we get displacement that gets above this high, this becomes a bullish breaker, balanced price range. And we prefer to see DXY decline, get below this, if it's going to be a healthy move to the buy side. So I hope this stuff has been making sense, guys. Now let's watch the fireworks. If there are any, because there's no news. Yeah, it looks like there could be. So we got regular trading hours gap, 50% level above us. All right, so it's a pretty decent sized regular trading hours gap. Not really too crazy, 35 points. It's actually not big at all, to be honest. This is taking forever to load. So yeah, we got this up here. Right. Let's watch how this is gonna be treated in here. So you can kind of see that there's slightly an SMT at the highs too. And so it's respecting this, right? It attempted to get through it, the fair value gap, but it's now kind of failing, right? And so now it's looking like if the DXY holds to the buy side, price is going to dig through these lows a little bit. So previous day's low here, we're going to watch and see if it could take that. I'd prefer to wait to see it take that and then see what the response will be, because it may simply just be taking the lows to then displace. Now instead of this high, we can look at this high. So if it was to get back above that, then that's what triggers in the buys. Otherwise, it's just going to continue to drop. If we go over here, oof, that was a pretty big drop, huh? Like this is the daily order block. Oh no, it's the previous day's low. So yeah, definitely viciously blew out those previous day's lows. DXY is not really moving. It's kind of lethargic, so not much to go off of there. Aside from it's, you know, just been gradually going higher. And again, it did get above this, right, which is an inversion fair value gap now. We do got the buy side targets up here, the equal highs, you know, but nothing in here offered any type of opportunity to execute, especially within the rules that we operate within here on this channel, in this community. I never take trades right at 6:30. I don't care how nice it looks. It's just the way it is. I learned my lesson over the last 6 years. I mean, there's no need to overwhelmingly push and try to get the, you know, the start of the crazy displacement, because just as big as the opportunity is to be, you know, to be like positive and make profit, it's still risky towards the other direction too, you know, because what if you're wrong? You know, like say if you wanted to take a buy in here, oh, it's broke above the fair value gap, higher time frames bullish, we're at the daily order block, I'm gonna just get ahead of it so I can catch the big reaction off of the 6:30 open. Yeah, okay. You would have just blew your entire account and your stop wouldn't have been respected. You know, you can compare that to, okay, I'm going to let this wait. I'm not worried about feeling like I missed a move, because in reality, the model that I operate within, all four of the models, nothing was there unless I was using the higher time frame and willing to break my rule and get in right as the open came in, which is unacceptable and something I don't negotiate with. It's just, it's better to not do it. And if you haven't experienced the why behind that, you will if you try to go against this rule. It's proven to save us more than it's kept us from opportunities, right? So because that's the statistical case, we're going to continue to keep that implemented because, it's proper risk management. It's a pretty nice move, though. There was a run on stops in here. Ended up getting down below this, kind of hung around a little bit, displaced once more, go from this high to that low, fair value gap. Respected the 50% level of the regular trading hours gap. If you take the overnight first 30 minutes, you take the start here, map out where the first 30 minutes is for the daily range. Drag that over, and we're going to use this as a reference. If we stay below this, and we stay below the first presented fair value gap, and the regular trading hours gap, and the equilibrium from overnight, which is from this high up here. Let me actually put this first. You take, what is it? From this low to that high, you get equilibrium, right? If you take those 4 levels, and price stays below that, right? That's continuously telling you the price wants to continue to drop, right? So, and if that just continues to remain throughout the session, it's a beautiful rolling gauge as far as whether price is going to continue to drop. Now, if price does this type of thing and then reaches up and gets back above this, you know that price is going to continue to want to go higher at that point. All of that initial move was just a fake out, right? So these are good little reference points to be able to watch and continue to allow yourself to trust whatever direction price is going in based on them. And then, of course, that's just an added confirmation on top of the normal process that we operate within when it comes to bias and narrative identification. And again, we go over that whole process every Sunday for the most part. Yeah, so with a displacement like this, what do you do if you wanted to consider trying to get back in? If you were, I don't encourage you to get in, because it could easily whipsaw right back and come all the way back to the buy side, right? Especially with DXY dropping. But what would you do ideally if you did trust that this was bearish? Well, you'd move up in time frames, right? You'd go up and try to see if there's a logical fair value gap somewhere that makes sense. At least up until this point, looks like we have a fair value gap here. We are hitting that wick midpoint. It dove a lot deeper than I would have wanted it to dig. I wanted it to potentially sweep lightly, but instead it did much, much more. Narrative is still bullish. We're still digging into that weekly bullish order block, midpoint here, right? The wick as well. So we'll see what happens, right? So now price is reaching into this fair value gap. So ideally, if you're trying to get into a move like this, you'd want to see price pull back against this large displacement, and then you'd catch the fair value gap, right? Or identify where that fair value gap's at that's going to reach into. And then once price trades into that, you would then go to like the 1 minute or the 30-second, and then try to see if you could frame out the rules taking place based on your model, whether that's a breaker, whether that's a YouTube model, right? Something like this, right? Within that fair value gap I just showed you guys, right? So this is what you would do, right? You set up the framework on the higher time frame, and then once it reaches a logical level that you expect the reaction from, then you would drop down from that upper time frame to the seconds charts and then try to reset the rules, okay? Like, where's the rules taking place for your model? It doesn't matter what model you use. It's the same exact idea, right? The process, okay? And this is how you can identify continuation variations within a price leg that's already moved and how you can reliably look to get back in. right? That's a continuation variation principle, and it shows up constantly. And if what I just mentioned makes sense and you haven't back tested that before, you're going to go in and back test it, and you're going to see just how fruitful this industry is. You don't just have one trade a day, and you'll start to understand how I find multiple setups every single day, generally, unless conditions are, you know, kind of crappy, like yesterday, right? But even then, you could still find like studyable delivery within your model based on this principle. But it may just be going back and forth inside of a range. But even with it doing that, the principle still applies. Okay, you just look for a higher time frame level to be traded into, whether it's, you know, 5 minute, 15 minute, 1 hour, and then once it gets up into that, especially after a displacement, you then drop down, and then you find your model taking place. All right, something like this, right? Hypothetically, you know, you could have used this if it does end up going lower, which I'm not trusting it because DXY. But if it was to go lower, right, something like this, right, low, high, if it broke through this low, that would potentially be something worthwhile to go lower. Again, I'm not saying that that's what you want to do right now. We're going to continue to wait. But like process-wise, that's kind of what you do, right? You may not have the seconds chart, right? So all you'd be able to do is use the 1 minute, right? You see the reaction from this wick? I very much like that. All right, so now let's see how price wants to behave around this gap in here. If it was to get back above it, this lower delivery back up to the buy side delivery, overlapping these areas down here, if we can get DXY to continue to push lower, that sets the stage for us to then try to seek the buy side targets and trust the buy side delivery, which again has been the main focus, even in the face of this. You notice how I haven't said anything about let's go short, guys, because I'm keeping my mind on that higher time frame. I'd prefer to see price turn back to the buy side. But how are we going to get in line with that? We have to wait and watch price print throughout the first 30 minutes. Right? Let it do the manipulation. Let it set the potential low of the day, like I mentioned earlier. Right, we're below the open price here too, as you can see. We drop aggressively down below it. The last couple of days have been consolidated. And so now we're just going to continue to monitor. I like this, right? It overlapped that. So if we're going to go higher, this should not come back into this, because this should now be turned into a BPR, inversion fair value gap. Now, if it was to trade back through that, then that sets the stage for us to go lower, right? And continue and possibly be flexible to trust some type of short idea, targeting the previous week's low, I believe, which is here. Right, but again, if it stays above that, it'll continue to want to push higher. We got relative equal highs up here, previous day's highs, so on and so forth. Okay, that's what I'd prefer to see price do. I'd prefer to see us stay above this, right? But again, we got to monitor what DXY is going to do and how it's going to treat this. But the trigger for us to then look to, you know, have a reliable delivery to the previous week's low, it's going to have to close back below this. And then if that takes place, this now turns into the bearish fair value gap instead of the bullish balanced price range overlapping fair value gap, which I've been recently classifying as a rolling balanced price range, because this type of stuff happens continuously throughout a range. You know, then there's a main BPR when you go up a little bit further in time frame to, you know, kind of have that higher time frame structure. But then as new, smaller building block balanced price ranges form, right, creating the price leg we're trading within, I classify them as rolling balanced price ranges, and then they can just be used continuously as building blocks as they form. This here, if we were to get down below this low, that'll turn this delivery higher into a bearish order block. So even if you wanted to wait for price to displace through this and get below this, that would then be able to potentially be used as a bearish order block. Again, nothing in here is telling us right at this moment, at least from my perspective for how I trade, that shorts are to be trusted, you know. And I'm willing to be incorrect if it does displace lower, because we have a plan to get back in line and be flexible, because that's the type of condition we're in. You have to be able to be flexible. You can't have a you know, a too solid, like unnegotiable or non-negotiable bias or narrative within this type of condition. It's consolidated, no news, heavily manipulated. So you have to be able to have a process that allows flexibility. If not, you know, I mean, there's nothing wrong with having non-negotiable bias. And if it's shorts and you're bullish, you're just not going to short. There's nothing wrong with that. You know, I have many friends that operate that way and they do just fine. But if you want to learn to be flexible, you know, you're going to have to practice this type of mindset and being okay with it. Okay, so now it's pushing through this, so I'm pretty confident that we are going to potentially get down here. Unless we lose this high, it's going to continue to try to reach for this previous week's low. You know, we'll see if it has enough juice to get down there. All right, so now not only is this overlapping fair value gap, now balanced in this case, that now that we're below it, right? It's traded to it, right? And then back through it, right? So buy side and sell side's delivered here. Okay, so now we can move this from the low to the high and use this as a bearish order block. Okay? You can see high here, low, swept that, right? So that's a shift in market structure, slight run on stops to a premium. And so this middle portion of this delivery in here, basically right where this candle's at, we cannot return. It should leave this fair value gap open if it's going to be trustworthy to go lower. It's a bit suspect because of what DXY is doing in here, right? So they may play games in here, but this is going to be a healthy delivery down to the previous week's low. This fair value gap should get left open because it's already got buy side and sell side. It's already filled in this whole fair value gap and got below it, right? And then below this should be able to act as a order block, which is also a form of a balanced price range. And price should be able to hold through, hopefully, you know, follow through down to the previous week's low if this continues to look like this, right? So that's what's on my mind right now. That's what I would like you guys to be thinking about, these different tactics, okay? And you make your own decision in terms of entry. You know, again, like I always say, I'm not here to get you in a trade. I tell you framework and the likelihood of something taking place, and you have to execute with your own model. It's the best way to trade or to teach. It's the best way to learn. Because if you're here trying to just copy my trades, you know, I'm laying out the framework. So I'm teaching you how to identify the framework. But if you don't take trades just because I don't take trades, you know, sometimes that'll be good, but sometimes in a lot of cases that'll be bad because you're just waiting on bated breath for me to make a decision because you've seen me be accurate. And that's not going to help you long-term pay your bills or be an effective independent trader. It's going to be a subservient trader that has to continuously look for others' opinion. And that does not last long in this industry. Okay? Yeah, this whole idea going lower, it's a bit suspect because of this, right? You see the BPR in here too, right? Overlapping fair value gaps. You see how it left a portion of that fair value gap open? That's because it doesn't have to trade up there because it already delivered. Now, if this concept is new to you, go and back test it. It's going to open up a lot for you in terms of understanding. It's one of those banger pieces of information that really, really helps. Yeah, let's see what happens in here. See this huge crack in correlation? I mean, that is just so nasty. It was like this yesterday too. So again, what does that mean? Does that mean that the algorithm's broke, that it doesn't work, these concepts don't work? No. It just simply means that we're in a moment in time where things are indecisive. You know, these are the times that you'll blow your account and overtrade and over leverage and doubt yourself and think, oh God, this is impossible and all this other nonsense. You know, so don't let that happen. Don't let yourself think that way. It's unnecessary, needless stress, because there's always another trading day. If you don't catch one today, you'll catch one tomorrow. If you hop on my live calls, if you know you've been in my private group, you know every single day we find something to make sense of. Doesn't mean we take a trade every day, right? Yesterday we only took a tiny trade, a 20. I only secured a 20-point move yesterday with my private group. It offered 30, but I held on to it, and it ended up turning around. Came back and stopped me out at 20. I was aiming for Friday's low yesterday, and it ran all the way back up before it chose to get down there again. Right? Did this whole nonsense. And then finally, or it did this right here, right? Chopped, and then finally delivered through. But yeah, so this is pretty telling how the Dow is raging higher, how we're failing to bust lower in the S&P. So we'll see if this whole entire movement turns into some type of significant retracement. Otherwise, right? And remember, we need those lower time frame signatures or levels to be met for us to change our opinion that the previous week's low is not going to be targeted. Because right now it's supporting that. You see how it's leaving all that available? It's because, like I said, it's a BPR. The previous week's low is very much in the crosshairs. It's just a bit shaky in terms of our overlapping confluences that we like to see. It's very sloppy today. You know, the Nasdaq obviously looks better than all of them. But you got to ask yourself, is it reliable based on the concepts? Right? Is this something that you can get into and have 100% assurity, or at least close to 100% assurity? This is also a counter trend trade because the higher time frame is bullish. Right? So again, that's not to, it shouldn't scare you to think about these things, but it should make you think like, okay, with these things being in front of me, this is the landscape. You know, this is the warfare going on in front of me. Am I okay with taking the trade knowing that it could be wrong? Right? Anytime it could be wrong. So, you know, it should just be a given. You know, you should accept that regardless. But certain circumstances have a higher probability, right? Higher level of confluence to help you trust the narrative and where price is headed. And sometimes some of the stuff will be skewed a bit. Cracks in correlation, no news, all these different things, right? So you got to determine whether, you know, certain circumstances require you to execute, or if you're okay with just waiting out and then studying the behavior, you know. And then maybe next time you'll be, you know, more confident to execute, but you still got to keep in mind the risk. You know, these are environments where risk is elevated. There's always risk in the market, but when there's times like this with some of the stuff we've just discussed taking place, the risk is more elevated. It's more likely that precision elements will not be on the table, you know, or they'll be very skewed and not as clean. So again, only you can make that decision, you know, when your model shows if you're willing to execute those types of circumstances. It's not up to me to decide for you. Even if I take a trade, if it doesn't line up with you or your model and the way you see price based on what you've been learning as an ICT student, you have to decide to not take the trade, because otherwise you're training yourself to follow others' opinions. You know, it's okay when you're learning to try to figure out the process and how you can go about it on your own, but that should be the goal, right? It shouldn't be, oh, this is an easy meal ticket, let me just watch this guy's YouTube channel. You know, if that's the case, you're going to hate being here, because I do not cater to that, right? I cater to those of you, which, you know, pretty much all of you guys on the call right now, you want to learn. You've seen the value of what I've provided the last 8 months, almost 9 months straight in terms of narrative, and us being correct almost 100% of the time, hitting an 80 to 88% strike rate, proven with the dashboard and data shown in my funded account with Top Step, you know, let alone the live streams, right? So you see the risk I just mentioned? right? You see how there's a possibility for it to just dance around. It's higher risk, more likely to fail the precision elements. Okay, so let's see what happens here. You notice how I marked this out earlier as well. Sell side invalidation. If we were to get up here, I am for surely confident, more than I am about this going down to the previous week's low, that if we break this high, it will absolutely, as confident as we can be, we can trust it to go up here. It'll, almost absolutely get up there. And if it doesn't, it'll just hang around in here and it won't do really anything. Those are the only options, right? So yeah, with that being said, we're inside of a macro now, 650 macro. Price has been delivering lower as we move into the macro. So because that's the case, where's the liquidity at now? You can make the argument it's down here, and that'd be true. But where's the liquidity at with the people winning in this delivery? Right? There's liquidity up here. Higher time frame still bullish. Right? So if we start to present ourselves with a displacement that gets above here within the macro, this is a run on stops, is it not? Right, price breaking up above this high and closing above these fair value gaps. That would be something we would want to see if price was going to go lower, is it not? Right, so then if it was to get up here, you could use this as a bullish breaker. And then you could use this as an execution. In which case, this range here that is the order block, if it was to be bearish, would then turn to the bullish breaker balanced price range idea, and it should still not come back down to the midpoint, preferably stay up above the upper 25% level. And again, we still have a little bit of a gap in here. I wouldn't be surprised if that's what they end up targeting, especially if DXY finally falls out of bed and continues with the downside objective. So let's watch this in here. If we break this high here, that may be an early sign that price is ready to attack this high. And if it takes this high, that sets the stage for these upper levels to be targeted as well. So now we are almost creating an order block here. It's now trading and closing above the range that should have been able to hold the midpoint. Stop hunt. So now let's see if it can get above that. Create that as a bullish order block. DXY is tanking. Very sloppy correlation. The S&P is rallying. Let's see what happens in here. Still inside the macro. We are pretty close to this previous week's low. It is still kind of holding here in the mid portion. You see that? It still has some of the fair value gap that's left available. Again, we don't want to see this hold too strongly if it is going to turn. Displacement above this high, like I said, is an early sign given this shift, and the stop hunt with the higher time frame still being bullish, right? So if it breaks above that, this will be pretty easy target. And if you're still on the side of shorts, how would you paint the short out? Well, if we were to continue to close and displace down below this fair value gap, this would turn to an inversion you could potentially use as a framework if your idea was favoring shorts. I don't necessarily trust it unless this takes place to get down below that, especially because it's retraced so deeply In a fast-paced downtrend, this midpoint wouldn't have even been considered, right? It wouldn't have been tapped into at all. Notice where it's at right now, right? Where price is hanging out. We're inside that weekly wick. So ideally, if a run higher was in the cards, it's going to end up displacing back above that and staying above that, right? Trigger for invalidation for any type of buy delivery in here would be closing, overlapping this, and then using it as resistance. And that would still support this as a bearish order block, right? Like I mentioned earlier, we haven't fully invalidated the bearish order block, okay? Displacing above this, like I said, would be an early sign that this is going to get taken. You know, us respecting this, you could see, I mean, that's pretty perfect in terms of respect. So unless it displaces up above here, this is not a trustworthy scenario to look to buy. You know, it does have an overlap fair value gap in here. For me personally, this would be an aggressive execution to try to buy. Yeah, I'm not an aggressive trader, right? I like to let price tell me what it wants to do. Sometimes it, you know, gives up the best execution, but then it keeps the door open if I got to be flexible. So yeah, let's see what happens within this. So remember what I mentioned earlier about continuation variations? This here, if it gets above this high, this is a run on stops inside of a fair value gap. This is a run on stops, right? PD array. This would be a shift after a stop hunt, right? And if there's a fair value gap that overlaps this one, that may then be presented with a potential for a YouTube model to go higher, right? At least the rules, right? The rules would be in place in that regard on this lower time frame. But yeah, we'll see if that's in the cards. This is very much time distortion, and it's very uninterested in really doing anything significant for now. So it's still within the macro, right? So it should deliver quickly within the next 10 minutes. Right? It is respecting this up delivery, which is a bearish order block. But DXY is not necessarily overwhelmingly convincing that it's going to continue to favor this going lower in terms of intermarket relationships. You know, so I will elect to wait. Go check the chat real quick. Friday's low, big move. Yeah, the whole 7 a.m. thing, saying it'll trade 2 regular trading hours gap by 7 a.m. It does not happen all the time. It is something to keep in mind. Macro to macro too. If this is going to deliver to the buy side aggressively, since this is the start of the macro, you know, if you want to have a time-based exit strategy, which ICT teaches and talks about here and there, I think he's mentioned it like 4 or 5 times, but you can literally use one, like the macro of execution, hold it up to a logical level of liquidity or up until the next macro. Because I've been showing that when price delivers, say like a buy side delivery, and it starts in one macro, throughout the rest of the hour, it may choose to hit the next macro, which in this case would be the 750 macro, and then, you know, within that last 10 minutes, decide to turn around and then close out the hourly candle. See, so now we've broke that high. We cannot lose this low. Okay, if we lose this low, that would set the stage for previous week's low to be targeted. Otherwise, this is now favoring us continuing to run to the buy side. This high, low, high failure swing, this is called a type 2 dealing range reversal. And you can see that we've now respected this balanced price range. Or, well, kind of disrespected the order block / balanced price range 50% level. And because we've displaced through it, like I said, it sets a stage for the buy side to be targeted. And pretty much everything that we just mentioned has now come to fruition. We'll see how deep this wants to go. Right? Would be nice to get it up into this level. But, you know, you can't always have what you want. So we'll see if today can end better than yesterday did. Should be able to have a fast move if it is going to run. DXY is turning right now, so it's kind of, eh. Very nasty, nasty DXY delivery. Look at the massive crack and correlation. We got the Nasdaq, the slower mover, the six sister. So if the other three run, Nasdaq may continue, but then again, Nasdaq may, given the fact that it's the slower mover, it may not want to really do the same thing, especially because it's consolidation and there's news tomorrow. It may need the news tomorrow to move the way that we would like to see it move and give us that large range we're looking for. Yeah, the Dow and the S&P moved. Nasdaq offered 20 to 30 points with what I just gave out, right? In terms of, you know, price potentially giving that reversal and then breaking through, right? So, you know, there is an argument for something in here, right? I think, let's see. I mean, even if you had the short idea, you wanted to push that from the middle. It offered 20 points easily, 20 to 30 points. Even this down here, right, that offered 20 to 30 points as well. So let's see how this holds in here or not. DXY, let's see, it's sideways, so that's going to make this have a sloppy delivery, and you could see that manifesting beautifully. Well, in a nasty way. Got another stop punt in here. Let's see if that results in the run higher like this. And we don't want to lose this fair value gap. Big displacement here. Yep, Mike, you know the vibes. Definitely delivered that 20 to 30 point threshold. That's what we look for. But, you know, like I said today, the expectation is sloppiness. and we can see that it's very nicely following that opinion. So this here, this blue line, you may be wondering what that is. That's the previous day's low. Right, so it swept previous day's low. If we can quickly get back above it, that'd be nice, because that's a pretty strong indication that it was just a stop hunt. Right? Notice how it used it as resistance. Right? So the support resistance traders were offered something, but now it came right back on them because guess what? The higher time frame is still bullish. So just gonna have to deal with it, right? Yeah, very nasty in here. But yeah, overall, hopefully everything's made sense today and kind of cleared the fogginess that may have been presented by what we've been seeing the last couple of days. Hopefully you see the opportunities that are available to you by spending time here and using ICT concepts. Right? Got this little order block in here. We'll see if that has any impact. So like I said, we got this purge in here. If you're trying to figure out a continuation variation off of this price delivery in here, nothing would have been offered yet, unless you, of course, took this down here and were involved here with your stop below this fair value gap. Or like I said, this could be an aggressive buy, which it was, you know. DXY is nasty, so the likelihood of this displacing, it falls off the more, especially when it starts turning like this. It starts to really knock off the ability for this to want to continue to rampage back to the buy side. You know, we still got that previous week's low down here. We still haven't taken out this high. So we'll see. We'll see what happens. Kraken correlation is very big. No, but it's still holding somewhat, right? So we got this wick here. If it was to break through that wick, the up wick with an overlapping delivery, in this case to the buy side, that would leave a balanced price range as well. That's another form of a balanced price range. And again, if this was going to be bearish and this wick is delivered, it should not have to come back up into this fair value gap. I mean, it could peak like a little bit from the high of this to the low. That's about it. It should not have to come deeper up into there if it's going to still want to short. You know, it's kind of like the logic of why fair value gaps get left open. Has to do with balanced price range delivery. Yeah, we're in time distortion right now, right? Meaning price is just stuck, right? It's just being held. Give a little bit of a flurry, but overall it's pretty much stopped out. Or not stopped out, but stopped really delivering much. So now we're contesting the fair value gap. DXY is getting some legs. Right, remember we still have those equal highs up here. So if it opens up and wants to reach for that, that's where it'll be headed. Right up there. And then that would set the stage if we do look to target that. That'll set the stage for the previous week's low to get violated. The only way any type of opportunity would set up in that regard would be if we break through these levels in here. We now have an order block in here as well. Possible bullish breaker, but it hasn't broken above to fully cement this as a bullish breaker. But we do have an order block, right? So if it closes below the mid portion here, that's going to be the line in the sand that sets the stage for us to target down here. Potentially, right? Because it looks like they are really interested in holding price. Very, very small volatility today, which again is to be expected because no news ahead of news events tomorrow. Today and yesterday could just be building sentiment. Let me check the chat. Would you buy? You marked up. Hard time from journal liquidity. Deja vu. I'm not really sure what you mean by that. Would you buy here when you mark up a higher time frame drawn liquidity on downside? So I haven't really mentioned any real opportunities that I took. I did mention, something to watch in terms of the response here and within this. But I have this drawn liquidity down here because if we have to be flexible, I'm going to be able to switch my opinion if certain levels are broken, which I've described this morning. Like the whole process behind that, like what would allow me to be flexible and where, like what levels need to get violated for me to target the previous week's low. I've had this mentioned pretty much from the start of the day. We kind of talked about it a lot as far as why this is there. But yeah, we're pretty much stuck in consolidation in here. DXY is, somewhat looking like it's interested to go higher. But overall, it's just kind of been a mess all morning. Some flurries here and there, like I said, but yeah, it's not necessarily super dynamic. Again, if we break this low down here, like I said, this will turn into much more high probability to get down to the lows over here. Nasdaq is the weaker of the three, so if any of them are going to go lower between the three indices, it's going to be the Nasdaq. But again, we haven't entirely turned off the interest for this to want to continue. It's become a lot less likely because of how aggressive this is, right? How much it's opened up since 7 o'clock. But nothing in here makes me excited to execute and put my money towards. It just looks like a meat grinder. Well, an account grinder, I guess you could say. So yeah, it's kind of been the vibe today, right? Sloppy. If you look at like the larger time frames, right, like this, is this really something that you can consider high probability? Is that something that looks certain? Like, oh yeah, I can't wait to put money behind that. I don't think so. And I'm sure if this is what continues and you go on social media and you go look at some of the good traders, they'll say the same stuff. Especially yesterday, I saw a lot of traders I like to watch that are charter students, like Kane, Jade Cap, some of the other well-known names. They mention when things are sloppy. It's good to be around good traders. So then if you have a bad day and the market looks like shit, you can look at their opinion as well and see, okay, you weren't the only one. That's why it's good to be around good traders that actually prove and have the balls to come out and do it live, because most don't. You know what I mean? And it's mainly because, in a lot of cases, they're not actually trusting in terms of their own process. Then again, there's a lot of traders that don't do it because they just don't feel comfortable, and that's fine. That doesn't mean that they're bad traders because they're not comfortable to do it live, right? But a lot of them that are out here hella loud, that don't live stream or show something as simple as what we've done today, they are fake, and you're wasting your life watching them. Hitman said, can you tell me how to determine the BPR? So there's many different variations, but very simplistic way of doing things. A BPR is basically delivered when either fair value gaps overlap. I'll just give you a couple variations. Either overlapping fair value gaps, right, like a big displacement followed by another displacement that breaks it, either to the downside or to the buy side, whatever direction you're headed in. Balanced price ranges are also created by breakers, because there's sell side, buy side, then sell side again. So both sides are delivered, and then it pushes away. Or an order block in itself, like I said, presents a balanced price range. All ICT's PD arrays, for the most part, when you're identifying them, they should be looked at as balanced price ranges. That's what they are. But because there's so many variations in terms of price creating balanced price ranges, ICT created PD arrays, the word, right, and named different variations, different things, because they deliver in different variations, but they are still bringing you to something very similar. This is why you only need one PD array. Not only that, but they also have continuation variations to every model, which is again why you only need one PD array to master. And then you get familiar with the other variations or PD arrays or balanced price ranges, so then you can know how to navigate price. When something should deliver into something or when it shouldn't. When can you respect it? Right? Like, since this is holding here, this high to that low, delivering to the buy side, should create what I call a rolling balanced price range. Basically building blocks that continue to hold price. And once you start seeing them get violated, it's breaking through levels that need to hold, or breaking through balanced price ranges or multiple PD arrays. So what does that tell you? That means that price is probably going to go in the other direction. Right? This one here, this high to that low. Right? It should be able to respect. If we get above this high after delivered sell side, then buy side again, this high should be a breaker. It should also, if I move up in time frames, be a bullish order block. But then you can also just look at it as a balanced price range because both sides are delivered. Right? A lot of people overcomplicate this concept, as they do with many other of the ICT concepts, because they don't know what they're talking about. Or they just want to sound smart, or they want to seem like they created something that they didn't create, And it's just nonsense because it hurts people. And, it's part of the reason why I go live. That's why I've been more public than I ever have been, because I was one of those people that got hurt at first from a bunch of idiots that don't know what the hell they're talking about. Right? So yeah, and then same thing with this, right? If this low, that high, delivers through the low here, we should not expect price to come back to the middle portion of this range. First of all, it's already done a lot of work over here. So if it breaks this low, this is a BPR, but it's also already done a lot of work. Unless, of course, it's going to consolidate, which is very much a probability today. given all the things that we've talked about. Yeah, I hope I answered your question, Hitman. Hopefully that was easy enough. That's as easy as I can describe it. Yeah, I got the previous week's low, and then of course this low as well. If it was to target down to the sell side, we don't have enough evidence for me to take a short, especially because DXY is not fully committed yet to going higher. It's not really committed to doing much of anything, if we're being honest, right? It's kind of just sideways, which again, it's kind of was the expectation coming into today, because there's no news. There's news tomorrow. We've been overwhelming consolidation. We're stuck at a higher time frame daily and weekly order block. It's just not moving, because again, like I said at the start of the video, it needs to have institutional sponsorship for the higher time frame to deliver. When can you schedule that? You could schedule that around news events. So when you're trading from a higher time frame level or to a higher time frame level, expect that you're going to require some type of news event, because you have to have volatility for price to move, right? And volatility, institutional sponsorship type volatility, comes from news events. You know, like I also said too, another perspective, you could use higher time frame delivery, or you can use the news events as macros for the higher time frame delivery, to a level or from a level. So yeah, let's see if it could take this low out. If it takes this low out, my attention goes here and here, especially if we could see this go higher. You can see the inversion fair value gap. We're now turning levels to inversions. You know, we're back down below this low to that high. It failed to break above that. I think there's also potentially, yeah, there's SMT there too. So we got SMT at the highs here, so that's supportive of previous week's low being targeted. The only way you would look to buy again, or consider looking to buy again, would be if price shifts above this and inverts this level and gives displacement. Otherwise, it's not trustworthy really. And then if it was to break above this, we got this high to that low to be used as a bullish breaker. And yes, you take the upper candles and you drag them through these candles, because this is the parent range compared to the trading that's been done inside of it. You know, you can just imagine both buy side and sell side in a consolidation is generally being efficiently delivered. It's making sure no level is not traded to, and then eventually you see equilibrium within a consolidation be utilized as a launching pad, right, which may end up being this here that sends price below here, and then maybe even down here if DXY can get some damn legs and start doing something. It hasn't really done anything except trade into this fair value gap I showed earlier. Where the hell is it? Let me actually clean this up a little bit. Yeah, right here. So you kind of traded into that. Stop raid, shift the market structure. Now we're kind of stuck inside the fair value gap, which is inside this high to that low. Right? Measure out equilibrium, it's somewhere in here. And you can see how sensitive that level is. It's traded to and through it multiple times. So if this is going to run higher, you know, it may very well use this level, this price leg in here to get us up here. But of course, right, we'll have to wait. Oh, wow. I switched to the other thing and it just boop. Boom. Target's taken out there. Inversion fair value gap. Now it looks like the previous week's lows. A pretty sure target. But we'll see. Right? Remember what I said about the equilibrium. As I was saying it, it was delivering within it. And I said, if we're going to move, it's going to use equilibrium. That's a very powerful study. Tip that pretty much majority of people don't talk about. I've heard one person talk about using equilibrium within a framework. And he just so happens to be a charter student. Pretty big on Twitter, X, whatever you want to call it. Maybe I'll get him on a live with me at some point. I think he would provide tons of value. He's a really good teacher, excellent trader. He's kind of fighting with Trader Kane right now. Maybe that'll give you a hint who it is. If you guys know who Trader Kane is. But yeah, so yeah, we're still going to use this high to that low. Should be able to act as a overall balanced price range. It shouldn't have to come back into the mid portion. Should not spend too much time in here as it looks to target this low. If it is, in fact, going to target this low. So let's see what the reaction is going to be from this low here. Fair value gaps in here. These should not get attempted. DXY is moving pretty quick now, so it should be able to quickly get down below this. It's not inside of a macro, obviously. The macro didn't really do much. It did deliver the buy side, but we could see there was SMT at the highs here. DXY wasn't really helpful. When you have SMT, you got to validate it with DXY, especially if you have two of them, right? But look, let's see if these will get left open because this is a balanced price range. So far, so good. Yeah, Mike, you called it. Hopefully your time with me in the private groups been manifesting fruitful results. You've been showing me a lot, so I'm assuming it is. You know, same with you on you guys on YouTube. I provide a lot, you know, in both venues, right? Here on YouTube and with my private students. So no one really gets left behind, really. They just get a little bit more attention in everyday live calls, just like this. But yeah. Yeah, let me know how you guys have liked the call today. Is there anything that stood out? Did you learn anything new? Did anything get reinforced? Did everything make sense? Right, just let me know some of your thoughts in the chat. Appreciate you guys hopping on. Yeah, that's for sure. It just took a little bit of time. Remember, you know, I mentioned as we were going into the session, I said we gotta wait. There's no news. We gotta wait till 6:30. 6:30 came, chopped around, had some flurry of volatility, talked about some specific actions that need to take place for us to trust, you know, one thing or another. And then it, you know, finally opened up after failing to take the high. DXY opened up to the buy side. You notice how that's when this has now decided to open up to the downside. But prior to that, DXY was not really doing anything. You know, it was whipsawing back and forth. And as a result, it translated to choppy, sloppy delivery with the indices. We also had cracking correlation between the three indices. The Dow is doing an amazing run, actually. It's not always that you see DXY, or I mean, the Dow cleaner than the other three indices, but today that has absolutely been the case. If this would have happened in the Nasdaq, we would have been able to ride that all the way to the highs up here, London's highs. But, you know, just denied it. And now we've swept the lows here, but now we got SMT at the lows on a larger scale. If we move to the 5-minute, right? So there's larger SMT at the lows. There was already SMT, right? Here. Now we got SMT yet again. So yeah, we'll see, right? Remember this low to that high of this candle, right? The mid portion of that, if it is traded through, that'll turn this off. If it closes above the midpoint, it'll turn this off for sells. Yeah, but we're gonna watch this in here. You guys see this failure swing in here? At the low, high, low, failure swing. So the lower portion, or this candle here, should be able to hold price. Aside from the balanced price range idea, this area specifically should hold price. We should not have to come back up into here if it's going to blow out the previous week's low. And, you know, use this specific area or delivery to get down into it. So the 5 minute looks like that. We do see that the 4 minute actually did deliver into the fair value gap above. DXY is still running higher, so again, I'm confident that, you know, we'll target this rather than try to turn around and go to the buy side, unless something changes, obviously, which, you know, as you guys have seen, we'll be ready for any type of change that takes place if it does. Go to the 30-second chart. We see an inversion for value gap. See a low, high, lower low, possible bearish breaker in here on the seconds chart. So ideally, once we break this low, this should be able to hold as a balanced price range too on a smaller scale. You could see how it translates from the higher time frame. Same principle can be applied to the lower time frame too. This low to that high, we should not lose this high if this is going to deliver to the downside. If we do, right, it's just going to be a pretty solid testament to the choppy, slow delivery. It's just grinding people's accounts that can't stop over trading. Yeah, we'll see what happens. Remember how I mentioned, while this was delivering, if it got below this, that would send us down most likely to previous week's low. I said if this high is taken out, that'll set the stage for us to get up here. Did that happen? No. It instead left SMT. Then it came down, purged out the invalidation level I mentioned for this to basically fail to go higher. And then all that's delivered so far was a short after that's taken place. So you could see the flexibility we're allowed to have with high accuracy and in terms of timing based on the concepts that I teach here, right? Which obviously originated in ICT's arsenal. You know, but not many ICT traders see things this way, you know. A lot still do. They just don't talk about it. It's too good. You know, they want to try to act like they created it. So, you know, but they didn't. Yeah, let's see if it has enough juice to get down there. DXY, you can see it's kind of topping out here. Every time DXY tops out or stops and starts consolidating, you see this slow down or chop back and forth. That's the importance of correlation. Yeah, I can say that once we purge this low, we'll have to wait and see what that's going to result in. Because, I mean, the correlation issue is very deep. Huge crack in correlation overall. you never know. It might kick back in line and eventually turn out to be a delivery that tries to upset the run higher. That's obviously something way later down the line, obviously. But it looks like previous week's low, which I mentioned on Sunday, if the fair value gap here was going to fail, right, or the delivery of this order block was going to fail, which it did, that sets the stage for us to target this. And the middle portion of that daily order block, like I said, if the midpoint is closed, we pay attention to the previous week's low. And then all the different details that we talked about today, throughout the different phases of the daily range this morning, you got to see both perspectives, how to think about both perspectives, but still be able to point out areas that will move in a way that you could be profitable with, depending on what perspective you have. It offered both directions. We talked about buys. We talked about the areas that should hold if it was going to continue. Then we talked about the areas that would fail or have to fail, and then how we would respond to that or look to respond to that. And then what we would target, right, for either direction, while keeping in mind that the higher time frame is still bullish. So if it was to kick back in line and start to really rampage to the buy side, even though it's been going lower, we'd still have the confidence to get back in line because we understand price. We're not guessing. We're letting price do the talking. We're pointing out the levels that are important, that you could visually see are being responsive, whether they're hit or whether they hold. And then you could see the result depending on, obviously what's taking place at those specific levels. So yeah, hopefully most of this stuff made sense for you guys. If some of it didn't make sense, just keep showing up, keep studying, keep asking questions, and within the next 6 months, 3 to 6 months, depending on how much you study and how often you show up, you'll be able to get a grasp of it. And your trading won't be the same after you spend 3 to 6 months here, with us here in this community. So yeah, like I said, this should hold. It should not come back to the mid portion. Right, the fair value gap up here was left. Why? Why did it leave some of that fair value gap? Because it's a balanced price range. And now previous week's low, it's finally going to be met. That's close enough for me to say that it was met. Pretty nice, pretty nice. I'm curious, did any of you guys catch a short? Just let me know in the chat. Well, I'm curious to see what happens when we purge that weekly low, because that's a massive liquidity pool. Big moves require big liquidity pools. Higher time frame delivery requires higher time frame pools of liquidity to be, or higher time frame moves require higher time frame pools of liquidity to be met. And PD arrays. Highs and lows are PD arrays as well. Right, so yeah. Possible reprint low of the week. Today manipulation to, yeah. I mean, it is still only Tuesday, and there is news tomorrow. So, we'll see what happens. If we look at this time frame, that's a pretty significant decline. We talked about on Sunday the fractal high idea. I'm not going to go into it today, but we talked about the anticipation of this looking to attack sell side with the different things that were present, like the fractal high that formed on the daily. Right, when a fractal high forms after the third candle, the next 1 to 2 candles can be expected to go against it. until it hits a PD array, which it did, and we anticipated this potentially holding, right? And then if it was to trade below the midpoint, basically solidifying the invalidation, then we would have targeted previous week's low. All of this was talked about ahead of time. The main objective, and then the contingency plan, which seems to have been, at least what the beginning of this week has looked to favor, which was targeting the previous week's low. All of this is still within the weekly bullish order block. Okay, so if at any moment we do see the price decides to break to the buy side again, and then maybe we see DXY decline, given the fact that we're still, not entirely disrespecting the bearish structural delivery, we could then get back in line with this continuing to push. Right? We outlined this as well, right? This big wick. It's also a bullish breaker for the GBP USD. This is just a mess, so it's going to have to displace, figure itself out, because it's not really doing much in the euro. It's pretty nasty here too in the GBP. It just looks a little bit better. But yeah. So the only time that I would turn my interest for bullishness off overall would be if this weekly midpoint of the weekly order block ends up getting traded through and closed below. Similar to how we just did it with the daily order block. Right, this order block, when we closed below, that allowed for our interest to want to go lower. Right? Even though the higher time frame is bullish. It'll be the same thing happening for this weekly order block if it trades below it and closes below it. Why? Because again, those are balanced price ranges. And if price closes below the middle portion of a balanced price range that's supposed to hold price going higher, that's indicating something very telling to you. Because it should be reactive if it's going to be bullish, right? And it should not have to retrade back into areas that are, supposedly balanced, right? But when they start breaking those types of things, or 3 PD arrays, or 3 basically balanced price ranges, right? You can start changing your opinion. At least that's how I utilize these concepts. And I mean, the result kind of speaks for itself when I'm damn near correct every week for 8 months, 3.5 years. Right. How do you prepare for FOMC? FOMC. Are you referring to the FOMC minutes? Because this is not actually an FOMC meeting. The ones that we look for. This is just it's going to be volatile. Trust and believe that. But it's not going to be anything close to what normal FOMC will do. But it will have some type of flurry. But on a FOMC week, or even a Fed chair week, because it's very similar, you have to automatically start the week with low risk, which we talked about, right? Every single FOMC and NFP, you got to look at things as low probability. It doesn't mean there won't be opportunities. Doesn't mean you can't find a trade. Doesn't mean you can't engage. Preferably you finish trading towards the beginning of the week though, and then study the rest of the week until you eventually get disciplined enough and secure enough in your skill set that you maybe look to be a little more risky. But even if you choose to not ever trade those events, ICT has said that it'll never change your career. And I'd have to agree with that statement. It's just more high risk, less precision elements will be implemented because just manual intervention is going to be at a high velocity. They're going to manually intervene to reprice to levels that they want price to get to. And you can't control that. You can't control anything other than what you risk. But if there's times where your risk may not be able to even be controlled because it won't respect your stop loss if the event comes out, obviously you want to sit on the sideline and not put yourself in that position. So it'll actually save you and make it a better experience in terms of being a trader if you do avoid those events. But if you're going to trade those events, you never trade before them or during them. You trade an hour after, right? Let price open up, similar to how we did things today. Let it open up and get into timing elements that we trust, like macros and the silver bullets, right? Those windows of time. And then, then you look to navigate after that and see what levels, based on liquidity mapping tactic I give you guys. You see what levels are still present based on that list of liquidity pools of common, most used liquidity pools, which I have in my my private group, apprenticeship group, and I think I have it sprinkled around the free Discord too. But it's simply a list of liquidity that you got to study every day. Right, so yeah, previous week's low is one of those on the list. Right, so yeah. And of course, for FOMC, NFP, and all these other things, you cut your risk by half automatically. And when there's no news, I mean, your risk needs to be cut in half. So if you already cut it in half, you don't have to cut it in half again unless you want to. And if you're just learning, I encourage you to do so. Okay, or at least cut your risk by 75% of what it normally is when there's no news on an NFP or FOMC week. And why, you may ask? Isn't that taking away your opportunity? Yeah, possibly. But if you're new, do you want to blow your account every day? It's like not knowing how to use a gun, but then running into warfare. What do you think is going to happen? You're going to get your head blown off. And this is war. You're in a financial battlefield every day. And if you want to survive, you have to have rules. You have to be reasonable. You have to be logical. You have to accept some of the hard truths that most people don't want to submit to or promote because they're trying to trick you into, listening to them. When most of these people have nothing worth listening to. So anyone that you see trading FOMC, NFP, or any of these other things during the event, they're stupid and they're probably resetting their accounts. It's entertainment at that point. It's not, looking to actually learn. They want you to either see them blow out ridiculously, which is probably in a demo, or, possibly get a windfall victory. So then you could think that that's something worth listening to, and it's not. You don't want to do that. If you were full-time trading, you're really going to risk that? Really going to risk not being able to pay your bills because you have to take a trade on the volatility that FOMC and NFP provides when it doesn't do that every day? And it's manually being pushed. It's not systematically being utilized like, the things that we talk about. Do you really want to risk like the normal amount or push yourself in that environment? If you do, then, you're going to have to just learn. I can't really tell you nothing. Nobody else can either. And no concepts are going to save you if that's something that, you want to do. Like it's something you have to do or you feel you have to do and you can't stop. You're going to have to save yourself. And it may take you hitting rock bottom to save yourself in that case. But most of the time, rock bottom means people quit. So, but people like us, we're going to still be here while those people quit. I started with like 50 traders when I first started trading, and 3 of them has survived. And I'm the only one that trades at the level that I show. Some are, pretty neck and neck with me. One of them is. He's in my private group and helps here and there. But everybody else, yeah, they're in the trader graveyard because they just would not listen. So, you're gonna make your decisions, right? You're gonna end up in the graveyard, in the trader graveyard, or you're gonna try to be within the 5% that listen to good advice. It's something for everyone to think about, right? But yeah, in terms of FOMC, NFP, like I said, Mike, it's hopefully that process is easy enough to follow. let me know if you have any questions. We could talk in the private group later too. But yeah, so as you can see, prices just basically looked to accumulate a little bit further, basically consolidation. That's what consolidation is a lot of times. It's either building sentiment or accumulating in a level. And that's generally what a consolidation is. So yeah, now we'll see what happens in here. So since we're approaching the last macro, we'll probably bring the session to a close. I don't really believe much is going to take place. It might, right, because we still have the macro, but we're now getting close to the lunch hour, which is 8:30 to 10:30. That's the lunch hour, the 2-hour window. And prices most likely, given the fact that it's dropped, I would not be surprised if they sweep these lows like they have and then look to target some of this internal range liquidity in here for the lunchtime delivery. So, you know, posing liquidity, right? Swept sell side, still in a higher time frame bullish trend until the weekly fair value or weekly order block is broken. So if it was to displace, that, you know, it wouldn't be too uncommon or unlikely. And whether it's going to get up here or not, obviously we're going to have to see. I don't believe it's going to have enough juice to get up there, simply because we have a lot of news coming within the next couple of days. So I do think that the next couple of days are going to be much more dynamic. But hopefully today you guys were able to learn something, reinforce some things. Appreciate you guys for spending time with us here. Appreciate you guys also subscribing to the channel and liking the video. Again, it helps me get in front of traders just like you that need to hear the realities, that want to be around people that know what the hell's happening. Don't claim to be perfect, but I do show consistency, and lots of students are now getting a lot of results from simply spending time here, because, you know, nothing's sugar-coated and it's all actual facts. You know, it's real things that you could tangibly see on a daily basis, and it's the same shit every day. Same thing over and over and over and over. And when it works, it's amazing, and it rarely doesn't. You know, but when it doesn't work and we have to adjust, like I talked about today, there's a process to adjust, things to look for, so then you can reliably be flexible and not just, like, you know, one-sided all the time. You know, you want to make sure you're focused on one side, like we were today, which we were focused on buy side. But if you want to be able to have a little bit more opportunity and be able to trade the other direction, right, there is a process for that. And hopefully today you got to see a little bit of that process, right? But yeah, with that being said, again, thank you guys for hopping on. I appreciate you spending time with us. We'll be live here on YouTube again on Sunday. You know, the last couple of days have been a little shaky. Hopefully you've been able to be safe. Anticipate that the rest of the week is going to be pretty nice. Okay, so yeah, that being said, I'll see you guys on Sunday. Those of you in my apprenticeship, let me know if you have any questions in the DM. Please share some of your experiences from today, if you took a trade, or just some of your thoughts, so some of the other students can see. And yeah, we'll have a conversation about it later. All right, but yeah, I guess I'll talk to you guys on Sunday.